CNSP and greed index is indicating that sentiments are changing and people are becoming less fearful in the market. Just a month ago, the index was at 11, showing that we were in extreme fear. When we look at a week ago, the index was at 14, showing that we were still in extreme fear. And when we look at just the previous close, which was yesterday's close, the index was at 22, showing that we were in extreme fear still. But things are changing. When we look at the numbers, the index is trending upwards, showing that people are becoming less fearful in the market and people are becoming a little bit more greedy in the market. The index at the moment is sitting at 27, showing that we are finally moved from extreme fear to fear. But it's now a great time to be getting back into the market. Well, let's look at the S&P 500 index. Let me clean up. Let's look at the S&P 500 index a little bit to see if this is a great time to be getting back into the market. But before doing that, welcome to the channel. My name is Seth and I cover the stocks and crypto market. So if you are enjoying the content, make sure to help a brother out. Hit that like button and hit the subscribe button. Now let's jump right into it. So at the moment we are looking at the chart for the S&P 500 index, and from the chart we see that the S&P 500 index is currently trading downwards in this descending channel pattern. And now this descending channel pattern is usually a bullish pattern. But recently the Fed came out with some bad news and they destroyed the markets, right? After we hit this midpoint line over here, after we hit that midpoint line around 4,100 points, we were getting some bad news about the inflation numbers. We were getting some bad news from the Feds about the interest rate hikes. And we see that dropped down the markets, right? The markets did not like that. The S&P 500 index dropped all the way down to the 1.414 Fibonacci extension level, around 3,640 points, right? So we fell down to about 3,640 points on the S&P 500 index. But at the moment we are seeing a bounce, right? We are getting a bounce, and I believe we will continue and we'll revert back to the midpoint, right? So let me clean up a little bit, and I believe we're about to see a reversion back to that midpoint. So we bounced off the 1.414 Fibonacci extension level, and I believe we're getting a bounce back to that midpoint line. So this midpoint line that I drew earlier on, I believe we're about to see a reversion back to that midpoint line. We are currently around 3,900 points. I believe we will hit that midpoint line around 4,050 points or 4,060 points, right? We see a lot of confluence also around 4,050 points and between 4,100 points and 4,000 points. We see a lot of confluence. We see that the trend-based Fibonacci extension level, the 786 Fibonacci extension level, is around 4,083 points, right? So there's a good amount of confluence in that zone over there between 4,100 points and 4,000 points. We see a good amount of confluence over there. Let's look at the mean reversion channel as well. So when we bring up the mean reversion channel, we see that the mean is currently around 4,061 points, right? So there's a good amount of confluence. The midpoint is around 4,050 points. The mean is around 4,061 points, and the 786 Fibonacci extension level is around 4,083 points. So there's a lot of confluence around that zone, and I do believe we're about to see a reversion back to that zone. If we do, after we hit that zone and we get some good news from the market, right, in case we get some good economic data in July about the inflation rates, the inflation rate or the interest rate hikes, in case the Feds come out and they say, okay, as they're going to bring down the interest rates, then I do believe we'll break even higher and push above the midpoint and head higher, right? But that is only if we get those good news, right? If we do get some bad news in the market, then we'll probably end up coming back down to the support line, right? So after we hit that midpoint around 4,050 points or 4,080 points, we'll probably end up coming back down if we do see some bad news in the market, right? But now let's look at some technical indicators as well. Let's look at the RSI. So let me bring up the RSI. And with the RSI on the chart, we see that things are looking bullish in the market, right? The RSI is currently above the midpoint. The midpoint around 50 points. The RSI is around 53 points or 54 points, right? So things are looking bullish. It looks like strength is coming back into the market. People are getting less fearful and people are buying, right? So this is definitely looking good. Let's look at momentum indicators. Let's look at the MACD. So bringing up the MACD chart, the MACD is also confirming what we saw in the RSI, right? The MACD line, this blue line, is above the signal line, right? And this indicates that people are buying. There's a lot of buy volume or buy momentum in the market at the moment. People are being less fearful and people are buying. People are buying a lot of shares of companies. So things are looking good. Let's look at the squeeze momentum as well. And then the squeeze momentum chart is also confirming the bullish move, right? This is also showing that there's a lot of buy volume or buy momentum in the chart at in the market at the moment, right? We see that after the sell volume decreased, and then the buy volume is increasing. So things are looking bullish and people are buying in the market at the moment. And I do expect us to push higher until we hit the midpoint or the mean or the 786 on the Fibonacci extension level. I expect us to hit the 786 around 4,080 points or 4,050 points. So there's a good chance we're about to see a reversion back to the mean, a reversion back to the midpoint, or a reversion back to the 786 Fibonacci extension level around 4,000 points and 4,100 points, right? But we could even continue even higher past 4,100 points if we see some good economic data, right? So in case we get some good inflation numbers, then that will probably cause the Feds to even reduce the interest rate hikes, and that would be good for the market, and that could push the market even higher. But that's something you definitely want to watch for this upcoming week. But now make sure to help a brother out. Hit that like button, hit that subscribe button, and leave the comment, buy the lows in the comment sections.